Good morning, everyone. You are watching a live daily market outlook for Tuesday, 26th of June 2012, prepared by Windsor Brokers. The overall sentiment in the markets turns rather neutral ahead of a key meeting, the Eurozone summit that will start in 2 days, will be on 28th and 29th of June, as well as Spanish official request for the bailout that currently keeps the markets on hold, awaiting for the further developments in the Eurozone, as raising fears about failure of the Eurozone summit, where the steps are expected to be taken to move from the current crisis and build the base for the further improvements. They were called as 4 pillars. We were talking about this yesterday, where it's required to build up closer economic relationships between the Eurozone member countries, as well as more centralized banking system, and something that will compensate loss of the sovereignty of the member countries, as basically this was required from the very beginning of the forming of European Union, as they are sharing the same currency. Then of course the banking and monetary system should be more controlled, and unfortunately in this case it was rather more independent for each country, and basically this was one of the biggest reasons where the countries are standing now, as lack of fiscal control let the countries handle their financial systems on their own, and mounting loans that were taken brought most of the Eurozone members, especially the southern countries, into deep crisis. As said, struggling debtor Spain is now likely to pay its highest short-term borrowing rates in over 6 months today, as investors demand high premiums, skeptical about Eurozone leaders' readiness to act decisively and tackle the bloc's problem. As said, Spain formally requested European aid worth as much as 100 billion euros for its troubled banks yesterday, but that failed to remove doubts about how the country can repair its finances, as it sinks into what many fear will be a deep and prolonged recession. Just recall that initial estimation was around 60 billion euros, and then some independent sources came last week. We were mentioning this in our previous sessions, and they came with the amount of approximately 150 billion euros required for Spain's recovery. As said, the mounting fears among the investors about a failure of handling the Eurozone problem currently keeps the strong pressure towards the downside. As we will see in our technical part, Euro is still, despite the current consolidative mode, still holding a quite strong downside pressure and a bearish outlook. A failure basically to find a good and workable solution will risk a further domino effect, as Italy is coming now as the next target after Greece and Spain now that is in focus, and that could have quite bad consequences, not just for Eurozone as a bloc, but for the other world economies and the world itself. As said, the previously discussed and arranged 4 pillars for as a good and workable solution for the Eurozone are still finding a strong opposition from Germany, and this is actually going to be the quite big issue during the Eurozone summit, and we will see if there will be some steps towards the finding solution, or the situation will stay pat, and basically that will signal further deterioration in the current Eurozone situation. From today's events and the calendar, still to come is UK's public sector net borrowing that is due at 8:30 with the 14.25 billion sterling forecasted for today compared to minus 18.81 billion of the previous release. Also at the 9 GMT, the UK's inflation report hearings. Just to mention, they already released events at 6 GMT was Germany GfK consumer confidence that improved compared to the forecast and the previous release that were 5.6 and 5.7 respectively with today's release coming at 5.8%. From Switzerland at the same time, UBS consumption indicator for May came lower than compared to the previous release at 1.41, today's release at 1.05. From America's 1300 GMT US S&P Case-Shiller Composite 20 metro areas home price index for April is expected for a slight improvement. Minus 2.5 is today's forecast compared to minus 2.6 of release of March, and at 1400 GMT US consumers confidence for June 63.5% is the forecast compared to 64.9 of the May's release. And we're going to take a look now at the markets and see the latest movements with the major currencies and the commodities and the outlook for today. As said, the euro is in brief consolidative mode after finding temporary ground at 124.70 yesterday, but still moving rather sideways as the initial barrier at 125.18 previous support, along with the descending 55 days exponential moving average on the hourly chart, keeping the upside for now protected. As the hourly studies are gaining some bullish momentum, possibility for further extension higher is likely at this point, but any stronger recovery requires a break above 125.80, 126.00 next resistance zone that will allow for a stronger recovery and confirm near-term base at 124.70 with the broken bull trend line of 122.87 currently at 126.50. Expected to limit any stronger movements higher, and basically only break above this level would be refocusing again the upper levels at 127 and 127.45 double top. On the downside, as 4-hour studies are still in the negative territory and keep the downside favor as 20 days exponential moving average crossed below 55 days one yesterday, putting an additional pressure on the pair. Loss of 124.70 is expected to open next stronger support, Fibonacci support at 124.62, just 2 ticks below 61.8%, and the higher platform at 124.40 mid-June range floor that will be loss of which will be bearish for the pair, and open levels at 124 and possibly to refocus 122.87 low on the short term action. On the upside, as said, only break above 126 and a broken trend line at 126.50 will turn the sentiment positive and open way for possible retest of 127.45 double top. Daily structure studies are again losing traction as upside rejection at 127.45 double failure create the double top ahead of reversal lower. The last strong barrier at 124.40 is for now holding, while the break below this level would confirm the lower top at 124.45 and turn focus firmly lower as a part of the longer term down move from 132.82 peak of 1st of May 2012. On the upside, as the gains recovery phase of 122.87 failed at 127.45, just ahead of 50% retracement at 127.84 and descending 55 days moving average at 128.00. the pressure remains more towards the downside as all studies are holding below the midlines, and the loss of initial bullish momentum keeps focus still at the downside. And as mentioned, in the short-term outlook, break above a broken trend line at 126.50 would give some more positive, will bring some more positive tone in the short-term outlook for the euro dollar. The sterling is bouncing higher in the past couple of minutes as a part of the consolidation of yesterday's low at 155.38, where the temporary support was found. The initial barrier at 155.87, 156.00, whereas the 55 days exponential moving average and the descending trend line of 157.76 high of 20th of June, regaining a strong barrier at 156 and breaking higher might bring some more positive tone into the picture, as hourly studies are now breaking above the midlines, and the strong momentum is shown as the current movement moves, current market movement towards the upside looks for test of 156.33 next barrier, and 156.50 seen as the next targets, with break above the later to ease the current near-term bear pressure and the open way for towards the upside, with the 157 seen next. 4-hour chart studies are still in the negative territory, but as the current movement higher improves, the current 4-hour studies, as they started to move higher, there is possibility of further correction. Any failure below 157 would be seen as a lower top and will risk lower top and further extension of a corrective move of the larger upleg from 152.67 to 157.76. Currently, more focus is seen on the near term. More focus is seen towards the upside, with 156.33 and 156.50 seen as our next targets. And as said, any failure under 157.00 would be risk of a lower top. As the market is moving, we'll come back again to the sterling to see after we finish with the other currencies. The dollar yen is in the sideways consolidating mode in past 2 days after a strong reversal of 80.60, the high of yesterday, where the pair basically reached our next upside target but failed to break higher, triggered a fresh weakness through significant and strong supports at 80.00 and 79.80, dipping as low as 79.42. And currently holding above this level, but this has weakened the near-term outlook as the studies on the 1 and 4-hour charts turned into the negative territory and turned the focus towards the downside. Currently, the pair is moving within 79.40 and 79.80 ranges. 79.80 acts as previous strong support, now acting as first strong resistance, with 20 days exponential moving average so far capping the upside and keeping the gains limited at 79.77. That's the highest so far. While on the downside, the still basing attempt is still alive at 79.42, but the risk is seen more towards the downside as all studies are negative, and the upside firmly limited under the initial resistance zone at 79.80 and 80.00, and basically only break above these two levels, firm break and bounce above these levels would reduce immediate bear pressure and allow for some stronger recovery. Otherwise, likely scenario would be break below 79.42 and 79.30 our next downside targets, and to open 78.00 as the next significant level and round figure support. The daily structure of dollar yen is still in a way positive, as a recent bounce of 77.65, despite the current pullback of 80.60, holds the positive elements in play and looks for a possible further retracement of the broader 84.17 to 65 descent. With the main bull trend line at 79.35 required basically to hold the downside and to maintain the near-term positive tone of 77.65, break below the trend line to open 79.00 as mentioned, and then 78.80 and 78.60 next downside targets as from the upside regain of 79.80 and 80.00. Will refocus 80.60 and break above this level to open 81.00 as the next target. The dollar Swiss is still in the near-term consolidative mode, but immediate threat is seen on a break below initial support 96.00, 95.90, which is the recent range floor. As yesterday's as reversal of yesterday's peak at 96.27 comes under pressure on a mounting MACD bearish reversal seen on the 1-hour chart, and this is actually seeing a risk as hourly studies are pointing lower and losing initial bullish momentum. This indicator might be signal of stronger reversal towards the downside with 95.82 dynamic support of 55 days moving average seen as the first one ahead of Fibonacci support at 95.62 and a strong one at 95.40 low of 22nd of June and 50% retracement basically break of this level would weaken the near-term tone and turn near-term focus towards the downside. 4-hour studies are still in a way positive, but losing traction as started to point lower, seeing risk of further reversal. As set break below 95.40 strong support would be first signal of possible formation of a lower top under at 96.27 ahead of our next significant upside barriers at 96.50 and 96.56 and 75, and will risk further weakness. Daily structure is still holding a positive tone of 90.41 low of 1st of May, as good support was found at 94.20 where the double bottom was formed last week, and the current bounce is still seeing a potential of further extension to regain 96.50, 96.75, our next targets above which to turn focus fully higher and confirm the higher low at 94.20 for possible attempt at 97 and 97.69. The quick look at the crude oil, that is again slightly under pressure, but still moving in the sideways mode above 77.54 last Friday's low, with upside being so far limited at 80.65, yesterday's high, and the near-term range top. As the studies are still near-term picture is still maintaining negative elements with the descending moving averages of 20 and 55 days. Keeping the upside limited for now. Immediate scope is seen for a possible test of the lower boundaries of the current range at 78.00 and a possible extension down to 77.54, our key near-term support. A more clear picture is seen on the 4-hour chart as the descending 20 days exponential moving average keeps the upside so far limited, and basically we need to see break above 80.65 and more significant 81.10 previous lows and strong support in order to ease the current bear pressure. On the upside, the key near-term barrier lies at 87.00. This is the peak of 7th of June, and basically only break above here would provide a short-term relief for the oil price and allow for stronger correction of the larger down move from 106.41 1st of May low, that that bottomed so far at 77.54. Long-term studies are negative and outlook is negative as Oil is attempting on the second attempt below the main bull trend line drawn of 2010 low at 67.15 through 2011 low at 74.94, and the break here is to turn immediate focus down towards 75.70 and 74.94 seen as the next downside targets. And the yellow metal holds a near-term structure is still in a way positive, holding the near-term positive tone of 1558 last Friday's low, with the focus still on Eurozone summit, and the gains so far being limited at 1588, approaching our first significant barrier at 1600, break of which would be first signal of a possible stronger recovery, as the downside remains vulnerable after upside failures at 1633, just ahead of 1640, very significant resistance. Risk still exists of revisiting critical support zone at 1530, 1520, while break above 1600 is required to ease the bear pressure and remove immediate risk of revisiting 1558, 55, and then 1530, 20 critical zone. On the upside, regain of minimum 1600 and 1633, previous top of 19th of June, would provide relief, while the regain of 1640 will be confirming the bottom at 1526 and the higher low at 1558 for possible stronger recovery. A larger picture for gold shows that the downtrend of 1790 peak of 29th of February 2012 remains still intact, as majority of the movements higher in the short term during the month of June are still firmly limited by descending 90 days moving average and holding around 38.2% retracement of the down move from 1790 to 1526, and basically break above 1640 zone would be a good signal of further bouncing higher as a part of the recovery attempt from 1526, with the 1670 and 1700 expected to come in focus in case of clear break above 1640. Failure under 1633 from the other side would risk another lower top and a possible extension towards the downside. Critical support, as said, lies at 1530-20 zone, and the break below these levels would be very bearish. That was all for today, 26th of June 2012. I would like to thank you all for attending our live sessions, and a reminder for tomorrow's one at the same time, at our usual time at 7:00 GMT. Our questions and answers session will follow after the end of this session, so stay tuned. We will be back. I wish you a nice day and successful trading. Good luck.